Having a good day. We don't have anything on the books this morning. Let's see. To share the link. So the internet guide a little bit better. They're still not back into shape where we would expect a normal internet. I can say that. Uh, so I see the restream keep dropping in and out. Maybe the recording won't be so hot, but you guys that are watching live should be able to see my screen. You should be able to hear me. And although I don't normally here to have, like a back and forth conversation, I am watching chat. So if you can't see my screen issues, then throw it in the chat and I'll see it. All right. So there's nothing on the books today. You can see the calendar is empty. I don't trust Thinkorswim. So when I seen the calendar was empty, my immediate thought was, I better go look somewhere else. And I did. I went to a couple other places. FX Street is there. I went to Econo Day events. There really is nothing on the books for the day. It is a holiday, and to do with the rest of the marketplace. So it's going to be just a regular day in the market. The big deal yesterday seems to have been a reaction to inflation. I mean, it seems like a lot of times they're just trying to find a narrative to what they see, not really the idea that that this was caused by inflation more, or the inflation fears. That's what they're blaming it on. More from the idea that as we an exaggerated move, it really needs to pause and take a break. So they can blame this on whatever they want, but the big deal is, and it's generally how I approach the market, is there a reason for this to be going down? Right? And usually the example that I use is like when Boeing had airplanes falling out of the sky and wiping out entire families of people. Their stock went down, and there was a good reason for the stock to be going down. But when we look at the market and we're on the ES futures, we see it going down, and the media is trying to find a blah, 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 inflation fears. Well, apparently the fears were just so scared now this morning, and it's bobbing back up a little bit. It doesn't matter on the why if there's no real thing behind it, right? Maybe they lost their warm, fuzzy feeling. At the end of the day, as long as we can apply some technicals to it, we can trade on the future side. On the equities, it's going to have to take a little bit of a deeper dive, especially if it's going to be swing trading. But at the end of the day, don't get too hung up on the why. A lot of the times we can't really put our finger on the pulse of why the markets are particularly doing a thing. Just want to recognize it did exactly what I was talking about Monday and Tuesday. So Monday and Tuesday, I kept saying, if we break this range, we're going to go to 46.25 because there's nothing there to hold us up. And so Monday, we stayed. Well, we never got out of that low that I had marked, that 46.50. And when we finally did, where did we go? 46.25. Hey, I was wrong by one tick. Broken clocks are right at least twice a day. I got that one wrong. I was off by a tick. We've rebounded. We're on our way back up. We are getting hung up in a little bit underneath this price shelf here. All right, now, when we're trying to mark out charts and we're trying to think about where liquidity is, these lower levels We've already passed through that area. So there's no liquidity here from trapped, right? It's current liquidity from that perspective. It's more of an idea of a volume node at that point because the transactions have already happened. Nobody is trapped there anymore. On the other hand, anybody who bought right here and has the capacity to hold their trade, they're still trapped. So we have trapped traders up here. A trapped trade logic generally is more of an intraday logic, right? Because a lot of these people would have to have resolved their trade by the end of the day. So if we take that same logic and start coming in here, think about anybody who tried to short from that hole right there. That kind of logic from here, still waiting. We haven't passed back through those levels. And since we haven't passed back through those levels, anybody that are trapped there to go short would still be trapped and short. They don't make up a lot of weight in this time frame, but once we're in the intraday, the same logic applies. That if you mark an all-time high of the intraday high, right? Intraday all-time high, and then we start fading away from it, and we can't seem to even get back up to match that equal high, let alone print a new high. Then it starts to give us this idea that we're looking for a rollover, right? Uh, in this beautiful move yesterday, could I have participated in that? It moved. Why didn't you just get in at the top like all the rest of us do? Sell the high. If you sell the high and it makes it to the lows and starts to come back up, you close your trade. Hey, you made a little bit and it didn't work. Try it again. It gets to the high, sell it. Gets to the bottom and it doesn't break down, close your trade. Okay, it didn't work. When you do that kind of trade, you're already short if it decides to get out of control and fall. Now, being able to stay in the trade and hang on for the fall, that's a completely different discussion. But there's a reason that I sell the highs and that I buy the lows. Instead of buying the highs, there's a reason for that. It's something to think about, guys. That there are a lot of ways to skin this cat to trade. If what you're doing doesn't work, try something else. So let's go back to the ES and mark our levels out for the day. Range is in play this morning. It is going to be the most important levels for us to deal with. We always need to be aware of the weekly expected move. Are we out? Where at? How far? How much? There's that internet issue. Just gotta, I pushed the button, gotta wait. Do it. Oh my goodness. Scared to even trade on these things with this kind of internet. There it goes. Yay. Okay. To the Monday's session of how far this market could or should move with a 70% accuracy. Saying it another way, 70% of all price action for the week should stay inside this box. We should also 80% of the time. So we wanted to know by coming out to the daily chart, are we still in the box? Yes. Did we hit the line yesterday? No. Everything is right there. That is where we closed Friday. And right now, that's where we're trying to get back to. And as you can see from these little gray rectangles that I drew, yesterday's high and yesterday's low is what's in control of our trading day. We have right now an inside day. Inside days are normal, they're common, there's nothing wrong with it, but it's very likely to be a choppy day if we right? We need a little bit of momentum here to get back above 46.60. We're kind of dealing with this price shelf back here. We need to resolve that and get back outside of yesterday's move. It's possible that we could do that. It is possible. More so, there is that. I was kind of looking through the numbers and the news last night. There wasn't anything really good, but there wasn't really anything bad, right? When we're looking at the news, in their news, did they have good job numbers? Did they have good unemployment? Did they have inflation numbers? They have the same kind of numbers to report that we have. Like news, at least we don't have that in our face, right? Normally we're like, okay, be cautious. We got this, we got that. We gotta worry about lunch. We got extra bonds. We don't have any of those things today. So what you see on the screen should consist and persist as long as no other news comes in to derail that move, right? So if we actually start trending in either direction, it could sustain. The difference between trend and some crazy impulse move. This is not trend, right? That's an impulse. This is not trend. That's an impulse. So when we're looking for a trend, that was trend. That was consistent, persistent price direction. It didn't stop. It kept telling you over and over, this is the direction that I'm going to go, and I'm not done yet. I'm going to keep going that direction. So if we get just like it did yesterday, persist all through the day. Take advantage of that. Tick, trend, AD, market breadth. Assistance from everywhere. So we're actually moving in sync. The dollar did get extreme yesterday. I've seen a lot of reasons for this, right? Again, maybe it's just a little bit of the bobbing heads on TV trying to find a Evergrande situation. They have to make that payment in American dollars. I don't think that they have millions of American dollars laying around. And so they have to convert over to the dollar to make their dollar denominated debt payment. Well, imagine that. The dollar went up yesterday because somebody was buying the hell out of the dollar. Now, we could put a lot of Y's on it, but if somebody just made a couple, they had to buy the dollar to do it. The reaction from them buying the dollar bled over into all the other markets. We had the VIX rocking out, but notice how late it came in that move, right? We had the ES futures getting rowdy way before that. So it was a little late to the game, but it did come into play. It was shocking. Just absolutely shocking. Keep your eye on these, and look at the algorithms right there. The machines were doing their job. That is perfect. The VIX, allow these tools to really help you out, to help you confirm what it is that you to validate the move that you're trying to trade. Don't be scared of a loss. Close the trade, find another trade, and get a winning trade. Is the most important part of that entire thing. Should we break back down today at 54? We'll deal with this low, yesterday's low. Back, our advancement will be down to flat. A move below that, and we'll be looking for the cog line at 46.11. We'll also have a little bit of structure back here to deal with.